Hey traders, Akil Stokes here, head trading coach and head currency trader at Trade Empowered. And welcome to another weekend review. I'm going to kind of wing this one. It's been a very busy day. Actually just got out of court handling some real estate stuff, tenants. But a very busy week as well in the market. And this week started off really big. If you guys are a syndicate member, you notice I shot out, I think it was Monday, shot out about 6 or 7 trades to you guys in a video on Monday or Tuesday, and then shot another 4 through the trading floor. And I know personally, I had about 10 orders on come Monday looking at potential advanced patterns. So a very busy way to start the week. Then news came out about German with the pound inflation and whatnot, and well, pound pairs were shooting up, and unfortunately for me, I was short about 4 pound trades, so it wasn't looking good. It was one of those situations where the week started off where it's like, you know what, it's time to give some back. I talked about this in past videos. I've been on a little bit of a mini heater, meaning a good run, but eventually I'll come back down to earth and I'll give some back, and I thought this was going to be one of those weeks. Now, it still may be. I'm in about 4 trades right now, longer term positions, 4-hour charts. A few have very large stop losses. So if New Zealand dollar doesn't go my way, Euro dollar, Aussie New Zealand, and pound Swiss, not so much pound Swiss, that's a small stop loss. But if those don't go my way, it'll still be a negative month. But fortunately, those trades at the beginning of the week paid off pretty nicely, and it was all due to patience. And I just had a conversation with one of our 12-week transformation members on the trading floor. If I can bring it up to you guys about that. He said the same thing. He said, I guess I mentioned something earlier. He said, Akil, sometimes we have to stick with the trade. Luckily, I stayed in Aussie dollar and Aussie Swiss, hitting target 1 and target 2 as we speak. And you know what? It's not luckily. It's you stuck to a plan. You stuck to your rules. You had your rule set. Once I'm in a trade, guess what? I don't go back on it. I stay in it until either my stops are hit or my targets were hit. I don't let emotions get into the way. We talked about this a lot during the live room. I'm not going to be that trader that says, well, it looks like it's going to lose, exit. Or that trader that says, oh, I'm up 20 pips. Even though my target is 50, I'm going to take it out now because 20 is better than nothing. No, we stick to our trades. And perfect lesson. I told this guy, these are the best lessons. When you do that, when you stick to those rules and you see it out, until its conclusion, it's a magical feeling. And you know what it does? It helps you for the next time as well. So he said, yeah, this week got pound trades too early. So he was in some of the similar pound trades as I was, and I guess took out the losses. And well, let me just show you a few of these trades. 3 out of the 4 pound trades I took ended up coming back into profit. And I'll show you guys a trade that's on my radar in a little bit. But 3 to 4 pound trades came back into my profit. Let's start with the loser. Get the loser out the way. The loser was on pound Swiss, and forgive me if I don't remember where these exactly were. I have a very short memory when it comes to this type of stuff, especially these losing trades. But I think down on the 60-minute chart, we had a cipher pattern on pound Swiss. Let's just see. If I'm just going to do it off the top of the head, it was probably something like this right here. X to A to B, B to C, C to D somewhere up here, and then boom, blown right out the water. I'm actually in a current trade, a trend continuation trade right now on pound Swiss. So I'm not revenge trading, but another opportunity to try and make some back. But I had a loser right here on pound Swiss. We had another trade on pound yen. Again, these all happen to be pattern trades. Pound yen. We had a nice little, I think it was a bat pattern or a deep Gartley. A deep Gartley, X to A to B, B to C down here, C to D. Actually, I do think it was a bat pattern. One of the two. It doesn't matter. The point is our X was up here. Our entry is right up here. Price action spiked, even closed above our X leg, which tells us it's an invalid pattern. I don't personally use the graceful exit rules that I teach some traders. Again, I stick into it till either my stops are hit or my targets were hit. I assumed this was going to be a loser. Thought I was going to lose. A little bit of structure to the left. Played our guardian angel, and this thing reversed and, well, came down to hit targets. Another one was on pound Aussie. I don't think this one was as stressful. But you can see the trade here on pound Aussie, another advanced pattern. X to A to B, B to C, C to D somewhere up here. This was one that I really liked because we had a very good DSR level. So we had a big area of protection up there. And you can see we came down and hit this. I actually have a trade to show you later on pound Aussie that is setting up a head and shoulders type trade. And the last one was pound CAD. And again, I'm showing you these trades just to give you an idea of what I was talking about. But what happened with all these trades, they really tested the limits, meaning they either passed that X leg or they came really close to that X leg, attempting to scare out. Ooh, looks like we got another pattern. Attempting to scare out a trader. But for those traders that stuck to their guns, that stuck to their rules, it ended up, and you can see here goes the blue, the purple bat pattern right here. That constellation is picking up. But those traders that stuck to their rules, if you stayed into it, it turned around, and I ended up making a total of about 50 pips out of those trades. So it went from, if I would have just exited, I probably would have been down about 70 pips if I would have exited early and got scared out, but stuck into it, more than made up for that 55 pip loser on pound Swiss, and was able to bank about 60 pips total, 50, 60 pips total on those trades. Now, what I want to show you was on pound Aussie. Here's what's got my attention. And I usually don't break down trades on here, but I've got nothing better to do. I was going to spend some time talking about Apple and gold, but those predictions have been crushed if you've been following me on TradingView. And if you don't, Akil_Stokes, go ahead and like my stuff. I've been doing some posting on there, but those trades have gotten demolished because either I was just flat out wrong, the Air Malaysia flight that got shot out the sky, or they're saying got shot out the sky today, possibly didn't help gold today. And I don't really mind showing you guys losing trades, but there's not even a learning experience from them, so it's just pointless. But here's what I'm looking on pound Aussie next as I just get home. And I literally just did this. I didn't do my higher time frame analysis yet, but I'm just looking at this. And we have a head and shoulders pattern here. I don't trade these personally, but they are structure-based trades. You can look head, left shoulder, right shoulder. We have our neckline right here. What else do you notice if I draw a line right in our neckline? If you guys have been with me for a while, you notice, look what leaves clues? Look left, structure leaves clues. Not only do we hit this level 1 time, 2 times, look left, 3 times right up here, another time right up here, and if we scroll back, we have 1 more time back here. So I'm seeing that as being a major structure level, an important structure level, something I want to pay attention to in my analysis. Now, the question is, how can I trade this? And I'm a structure-based trader. So the first thing I'm paying attention to is the market coming back into this level. I know that my kill zone or my potential reversal zone is somewhere between here, right? If this is a true trend continuation trade, the market should come somewhere up into the structure level. We should not create a higher high right here. If I want to bring in Fibonacci's, and again, I'm doing all this live for the first time, so I don't know if it's going to line up or not. We're going to have a 618 a little bit lower. 786, a little bit higher. We could bring in a minor fib. I really don't use this one too much, but if I want to make myself look good and prove a point, we bring a 707, which lines up right on there. More importantly, here's what I'll do in this scenario. And we talked about this in the live room. We talked a lot about CTS score, combined technical score, which is the process we go through before executing a trade. Identify, predict, decide, execute. That's the overall process, but the CTS score are the technical factors that we look at. The RSI, price action, advanced pattern, small pattern, structure, Fibonacci's, all stuff like that. And what we do is we go through a checklist 1 by 1, evaluate each setup, and give ourselves a point system. Traders are expected, after they do their back testing, to have a minimum point scale, and you can get fancy with it. You can adjust your position size depending on the point scale, but you should have a minimum point scale of what you need to take the trade. So let's say your minimum point scale is 5. You will not take any trade until you hit a CTS of 5. Now, there's a separation in there as well. It's not just once I hit the level 5, boom, fire a trade off, take it short. No, 5 just means this is a trade you could potentially take. Now you need to wait for an entry reason. So this is a trade I want to take. I like it. I know exactly where my risk is going to be. My risk is going to be up here, boom, above structure highs we talked about. And my reward at minimum is going to be a retest of our previous structure low. And I'll show you guys in a little bit how we can break this one down even more for a longer move for you guys that like more of a trend continuation play. But what I want to do in this case is identify my kill zone. Right there. I want to go down to my lower time frame, and hopefully Constellation doesn't put up any patterns. That's going to mess up my nice clean chart here. There we go. Go to my lower time frame, and I want to identify a trade setup. What do we have right here? RSI overbought. Boom. Put a little red arrow up there. Bang. Retest the structure. We're putting in a double top right now. This is a 15-minute chart, so I got about 4 minutes before this candle closes. So I'm going to know before the end of this video whether I should take this or not. I'll know if we have RSI divergence. This can be a next bar market sell for me. Why? Because now I have an entry reason. And let's bring in a 1618 Fibonacci extension 2 for confirmation. Bam! Who is this guy? He's incredible. So look at that. Even more fib confirmation. But now I have a reason for entry. I already know I wanted to enter the trade based on my CTS score. Now I have an entry reason that I'm allowed to use to actually enter the trade. So I'm going to get this video done quick so I can enter this bad boy or keep an eye on it. Now, again, you always got to wait till the close of the candle because trust me, if a higher high, higher close means a much different thing than if price action can hold at this level. But let's work our way back out to the 240, or actually back up to Constellation stealing my mojo. All right, I was going to talk to you guys about it. Looked like we had a potential advanced pattern there. Constellation is stealing it from me. We do. We've got a Gartley pattern down here. We've got a cipher a little lower. I'm going to do this, though. I'm going to get rid of this and put it on later. Here's what else we also have. And Constellation didn't pick this up yet because of the we haven't created the C leg yet, but we have a few patterns. We have two bigger ones setting up. We have another pattern right here. If I take an X to A, swing low to swing high, you see we come to a 618 retracement, giving us a potential Gartley pattern completion. Oh, wrong Fibonacci tool. Giving us a potential Gartley pattern completion right down here. Even if you don't want to use that wick, let's say you ignore that wick. We know it's news. We talked about that in the room this week. Let's take this wick right here. And we're looking at a Gartley pattern completion right down here at 81.41. But say you're not a pattern trader. You don't really care about Gartley pattern completions. Well, we can do this as well. What if this move turns around right here? Where would an ABCD pattern give us? A harmonic move. Boom, boom, right in this area. Fibonacci inversion. We can go, or Fibonacci extension from our ABCD pattern. Swing high to swing low. Bang, 618 right there. There's tons of things we can do to build a case. And why am I building this case, Akil? You said, imagine you're not a Gartley pattern trader. Why are you building this case? Well, because we want to think about where are the other traders looking to get involved at. If I'm in this trade short and I'm looking to take profit, I want to take profit at, I'm a bear. I want to take profit where I think the bulls are lying. So I always think like the other trader. I think that there's going to be some bulls laying right here. Major structure looking left. There's going to be some bulls lying down here at a Gartley pattern completion, ABCD pattern completion, Fibonacci confluence. We can build an entire bigger case as well. But if you're a trader that's looking for secondary targets, bigger targets, extended targets, something like that, you want to take that extra step in your analysis in order to find that level. So that's it. I don't know where I was going with this. I just kind of got on a roll and went with it. But I hope you guys enjoyed that. Again, I've got about 1 minute before this closes to see if this is a valid trade. So I'm going to finish out this video. But as always, guys, it looked like we may have a higher high, higher close. Let me just wait this out. I'll talk a little bit to you guys. As always, guys, hey, if you're new, I hope you guys enjoyed this video. Do me a favor, like it, subscribe it, share it with a friend. Just spread the love. Trying to stall for a minute. What else? I've been posting charts on TradingView, not Forex. So syndicate members, it's not the same as the videos I give you, not the same as the charts I post in the trade floor. I try to do more stocks, commodities, stuff like that, but the same principles of structure analysis. So if you're on TradingView, go over and follow me that as well. Still trying to buy time. There we go. Candlestick close. Guess what? Higher high, higher close. What does this mean? Invalid double top. Do not take the trade. Aren't rules beautiful? If I was that trader that liked it so much and just entered off of an impulsive move, said, you know what, it looks good, buy it right now, and then later saw this and the market continues up because that's what I would expect from a move like this, well, then I'm out of luck. I'm out of luck and I'm out about 30 pips too. Why? Because I didn't wait and follow my rules. Rules are beautiful. So there we have it. Hope you guys enjoyed this. There's a little bit of something. Again, hit that like button, hit that share button, subscribe, leave a comment. And as always, plan your trade, trade your plan. I will see you next go around.